Welcome to the TAC Index AI podcast. We blend our TAC Index data, reports, charts with the latest news and logistics, really focusing in on air cargo.
That's right.
So today we're doing a deep dive. We're looking at how air cargo, logistics, and, well, the wider macro market all connect.
Okay.
And we'll put a special lens on jet fuel prices and, capacity issues.
Absolutely. And we'll be pulling from the latest TAC Index updates, of course, but also looking at broader news, Wall Street Journal, Reuters,
Right.
trying to connect those dots for you, see what trends are really shaping things right now.
Okay, let's jump in. The latest TAC Index numbers, this is from June 23rd, 2025, the global index, BAI 0. It slipped just a tiny bit last week, minus 0.3%. And over the last year, it's down about 6.0%.
Yeah, and what's really striking there, I think, is that this slight overall drop happened even with some pretty significant headwinds pushing the other way.
Like what specifically?
Well, you had disruptions, cancellations in the Middle East, linked to the Israel-Iran conflict.
Right, that creates uncertainty.
Exactly. Plus, spot rates on some key lanes out of China actually went up, and jet fuel prices rose too.
So costs are up, disruptions are up, but the global average is slightly down.
Precisely. So it really begs the question, why? Why the dip? It suggests maybe something bigger is going on underneath.
Like underlying demand shifts, or maybe capacity easing up overall.
Could be. It hints that maybe those localized pressures, while real, are being outweighed by maybe softer demand in certain sectors or just broader capacity availability globally.
Okay, that makes sense. It's rarely just one thing, is it? So let's dig into those regional variations. Maybe that tells more of the story. Out of China, overall rates were a bit lower.
Yeah, overall slightly down from China. But it's a mixed bag. Hong Kong, BAI 30, that actually picked up plus 0.4% week on week.
Okay, small gain.
But then Shanghai, BAI 80, that went the other way, dipped 2.7% in the same week.
Interesting divergence there. What about Europe?
Europe looked, well, firmer. Frankfurt, BAI 20, had a pretty significant gain, actually, up 5.7% week on week.
Wow, okay.
And London Heathrow, BAI 40. Even though it dipped a bit recently, it's still way ahead compared to last year.
Yeah.
Like plus 20.8% year on year.
Right, so strong year-over-year performance there.
It really just highlights how diverse things are. Different routes, different regions, different capacity situations playing out.
Okay, so let's widen the lens a bit. Connect this to the broader logistics world. We've seen news about FedEx and UPS, the big delivery giants. Their shares have taken a bit of a hit.
That's right. And FedEx specifically mentioned expecting, what was it, $170 million hit?
Yeah, that's the number. And they linked it directly to changes in tariff rules.
Which apparently just crushed demand for certain packages coming out of China.
It really shows you how sensitive logistics is to trade policy, doesn't it? That direct impact.
Oh, absolutely. It's a perfect example. Those tariff changes basically made certain goods way more expensive almost overnight.
Right.
So demand drops, and suddenly a giant like FedEx feels it, right on the bottom line. It ripples through their whole operation, not just air cargo.
Affects the whole supply chain.
Exactly. The profitability, everything.
Okay, so zooming out even further then, to the macro market picture, stocks have been, hovering near record highs, right? S&P 500, NASDAQ.
Yeah, very close to all-time highs, within about 1%. Though the finish was a bit mixed recently.
Right. And what's driving some of that? We saw oil prices recover a bit.
Seems like it. The Israel-Iran ceasefire appears to be holding for now, which eased some of the volatility.
And that feeds directly into jet fuel costs, obviously.
Directly. But what's also interesting is Fed Chair Powell. He basically doubled down on waiting for interest rate cuts.
Still waiting. Why?
He specifically mentioned wanting to see how the inflationary effects of these tariffs play out first.
So the tariffs again, showing up even in Fed decisions.
It really underscores how interconnected everything is, doesn't it? Geopolitics impacts oil, which impacts fuel, which impacts cargo rates. Trade policy impacts demand, which hits logistics companies, and that feeds into inflation concerns for the central bank. It's all linked.
It really is a complex dance. So, thinking about this for you, the listener, what's the main takeaway here? We've seen geopolitics, fuel prices, trade tariffs all swirling around,
Right.
impacting air freight rates, hitting big players like FedEx, and even influencing stock markets in the Fed.
Yeah, it leads to a pretty important question, I think. In a world that's this interconnected and with things constantly shifting, how might, say, the next evolution in trade agreements or maybe further shifts in global demand patterns,
Yeah.
how might that reshape these air cargo routes?
And the capacity situation.
Exactly. And the whole competitive landscape for logistics providers in the coming months.
Definitely something to keep an eye on. Lots of moving parts.
For sure.
Yeah.
Something for you to mull over as you watch these key indicators.